Welcome back to the channel. My name is Brad, and today we're going to talk about PBDC and a general overview of business development companies, BDCs. All right, because BDCs, business development companies, can actually be kind of complicated, and you have to do a lot of due diligence to make sure you're in the right business development company and look at their activities and what they're actually doing. So without any further ado, we're going to take a look at Ares Capital today and look at what they're actually invested into. And then we're actually going to talk about the Putnam, the PBDC, where it's where they group a bunch of business development companies into one. And then what's the difference between Putnam's BDCs and the ETF BIZD. So we'll talk about the differences between the two and why I have gone with the Putnam version of PBDC compared to BIZD. So what is a BDC? Well, let's consider a business development company, a bank for a middle market companies. These are companies that aren't large enough to get great financing or low financing from a bank. So this is where BDCs come involved. They also act like private equity. So this is a way of getting into private equity without being a accredited investor. So let's define what a middle market company actually is. A middle market company is a organization that is greater than $100 million and less than $1 billion. That's a rough estimate of what a middle market company actually is. One thing that you'll look at in this is credit risk, and that comes into the analysis. So in Ares Capital, right? Ares Capital has credit, private equity, real estate assets, secondary solutions, and strategic initiatives where they're actually purchasing companies and acquiring companies. All right, so this is going to be an interesting one to look at. This is actually the biggest holding of PBDC is Ares Capital. Now that we actually have an understanding of what business development companies actually do, acting like a bank, let's talk about PBDC. So how can BDCs pay such a high rate of return? BDCs can pay high rate of returns because they don't pay taxes on their income that they receive. When we look at PBDCs today, they're paying a current premium of 9.89. This is an extremely high dividend to be receiving. They actually also, I should point out that they pay this out in a quarterly basis, not a monthly basis. Their dividends over the last few years have been very steady and consistent. That is something that we look for in income investors. Since inception, how well has PBDC done against the S&P 500? As the chart indicates, actually PBDC is slightly up, ever so slightly, over the S&P 500 over the last year and a half. They're keeping up with the market and giving us a great dividend on top of it. Looking at this, how do you diversify your risk out in the marketplace? Because it is about diversification. The markets go down. You'll notice this chart also shows that the market went down for the S&P 500 as well as the PBDCs. Keeping in mind, it's a great time to buy on the dip because you're actually getting a higher interest rate. And I'll take 9-10% on my money any day of the week. So let's give a little background to myself. As I get closer and closer to living only on my income, I look at these investments a whole lot harder than the average person, because one day soon, they will be paying for everything. If you like this type of content, please hit the like button, subscribe to the channel, and ring the notification bell for my next video. So why did I pick PBDC over PIZD? Well, number one, PIZD is paying over 11% in dividends. PBDC is getting close to 10. So what makes that difference? PIZD holds different business development companies that may have a little bit different risk tolerance. I went with what I'm going to consider a safer, more conservative bet of PBDC being a more conservative company and doesn't have a majority of their holdings in one company. PIZD has over 20% invested in Ares Capital. Ares Capital is a great business development company, but I don't want to have all my holdings. I want diversification. And having that diversification and somebody picking the business development company's holdings is awesome. I'll take that little bit of a hit, being able to sleep at night a little bit better. Those are my reasons. Now, if you hold BIZD, no harm, no foul. Still a great index, but they're not picking actual business development companies. They're just going off of an index. Is PBDC something we should hold in our portfolio? As an income investor, of course, I'm going to say yes. Anything over 9% that's fairly steady, that doesn't depreciate in NAV, is a very good investment for myself. I think everybody as an income investor should have some type of exposure to business development companies, either individually or through a fund like this where there's actually somebody behind it professionally managing it. I know that I don't have the time to go through every business development company and take a look at which ones I want to hold, which ones I don't want to hold, which ones are good, which ones are bad. Here you're paying somebody to do that for you, so it's worth a few dollars. So in the end, I would hold this in my fund. I actually do hold this in my fund for the dividends. If you like this content, stick around and there'll be more later this week. Take care.